Welcome to Behind the Campaign, the podcast where marketers pull back the curtain on some of their favorite marketing campaigns. I'm joined today by Jason Fishman, who is the CEO of the Digital Niche Agency, or DNA. Welcome, Jason.
Hey, Andi. Excited to be here. Thanks for having me on.
Sure. Now, your agency works with a lot of different industries, but you kind of specialize in one specific industry of marketing that we're going to talk a little bit more about today. Tell us a little bit about your agency and this kind of area that we're going to talk about.
Sure. So I started as a growth marketing firm. My background is in advertising, was running a mobile advertising network before this. And I quickly found, A, I needed a niche, a specialization. All of the top agencies had their area of focus. And B, I was constantly being driven into this conversation of capital raising, whether we were going to be presenting our results to their finance partner, their investor, to be able to scale, or even working on the marketing section of business plans, pitch decks, participating in those investor meetings. It was always part of the discussion for us. I was introduced to Reg D 506C. Reg D 506C allows for solicitation of accredited investors, meaning I could use my digital marketing skill set to source investors, bring them in as leads to a company, an issuer's offering, and effectively raise capital for the groups I was working with. I'm able to leverage advertising audience targeting data there. So net worth, household income, portfolio size, what these folks are doing online. We saw success on our first campaign. That was a company called Rayton Solar, raised $2.83 million on their Reg D, and started getting introduced to more and more of these companies that were issuing these investment opportunities. The laws opened up even further for regulation crowdfunding and Regulation A+. Reg CF, regulation crowdfunding, allows us to target both non-accredited and accredited investors. So not just high net worth individuals, but any adult in the US. You can raise up to $5 million on Reg CF, up to $75 million in Regulation A+ campaigns. And we'll run advertising as well as outreach channels to content marketing funnels and convert investors. We'll measure cost per acquisition and then ramp it up as it's physically producing for the companies we're working with. We've worked on over 500 of these deals, have collectively raised hundreds of millions in capital. And I showcase a lot of the results in my podcast, Test Optimize Scale. I serve on a bunch of professional boards around this, actually get to speak to some of the regulators, members of Congress to open up the laws even further and abilities to raise more, even playing for tax credits and other things to bring more investors into the space. And it has positioned us as one of the top, if not top, agencies in the world doing this.
So when we think of marketing, we often think of kind of B2B or B2C marketing to customers or to other businesses. You talked a little bit about how you were able to use your marketing skill set in this new kind of niche. What are some of the ways that it's different than the traditional marketing?
Sure. From the high level view, there's more that is similar than different. I'm targeting very specific audiences, variants of those, seeing what's performing best, and driving them through marketing funnels and measuring conversions. The sales cycle is a bit different. Transactional value is absolutely different. And of course, the messaging. So I'll run 4 to 10 different audiences on an ad platform, definitely include household income and net worth and different investor behaviors. I built some of our own custom audiences. I built a database of over 1.8 million investors who have physically participated in deals like this. They're going to be quicker to convert, less of an educational process. The advertising messaging needs to speak to what the company does and what makes them special, unique, different, as well as the investment opportunity and why it is a better place to put time, energy, focus, funds than other places. The content marketing should support a higher conversion rate and shorter sales cycle, because it could be a few weeks to a few months before one of these prospects convert. Both the transactional value on a Reg CF campaign, it's going to be thousands of dollars as the average order value. On a Reg D campaign, it may be hundreds of thousands of dollars as the average order value. So even if we spend a few $1,000s to acquire an investor, the return on ad spend can be far more attractive.
So when a founder comes to you and they want to employ your agency to help with this type of marketing, is there something that you kind of have to explain to them about how you are going to go about doing this marketing that maybe they didn't understand before they came to you?
Yeah. Our clients are looking to raise funds and they may understand, hey, we need to do some marketing. Even in that scenario, they're laser focused on the cost of capital. Some of them are not as interested in the moving pieces to get there. And I have to take a step back, show statistics on the industry, how 50% of these capital raises are not successful. They don't produce more than on a Reg CF campaign, about $115,000. The top 10% produce $1 million or more, less than 1% hit the full $5 million. Happy to say we work with many of those. On the Regulation A Plus campaigns, similar but towards 8 figures of capital, 10 million or more. Half of the issuers are producing less than 8 million. And a couple years back, it was less than a couple million. So I have to be able to show what the top campaigns, the top issuers are doing right now, how they're going to be targeting the same investors that they're going after. And there's definitely a learning curve to be able to show, hey, here's how we're getting traffic there. It's a low percentage of the audience that's going to convert, but that's fine. If we're looking at around 2% as the average conversion rate internet-wide, 1%, 2% being a good conversion rate here, we have to make sure we're getting enough traffic there and that the content's engaging enough to show a conversion rate that produces a strong return on ad spend, and really want to collaborate, team up with our clients on that versus just present them results. Hey, it's working. Hey, it's not. I find we get a lot further if they understand all of the channels and touch points and the content, what's actually moving audiences forward, and have to emphasize to them it's social proof, it's third-party validation, it's the crowd effect, it's the line around the block versus the empty restaurant sensation. The top 10% of issuers get all of the investments, and that process doesn't stop in the strategy. It's throughout the entirety of the campaign and into the next rounds in many cases.
So it sounds like it's a lot about setting expectations.
Oh, yeah.
With your new clients. And obviously, when you have new when you have clients coming back to you to do this possibly, for multiple rounds, there's less of that you have to do as far as setting expectations. Is that correct?
Absolutely. If we're not playing for the same goals, they could be pleasantly surprised on what's being produced, but more commonly, they could be shooting for higher numbers than what we're looking to hit internally. So they can also be well aware of our top case studies and see, you got 29.25x return on ad spend, and from retail investors, non-accredited investors on this other campaign. We're a week in. How come we don't have, a 30x return? I have to be able to explain the timelines and initial performance benchmarks, upper funnel around impressions and reach, and mid funnel around clicks and leads, and everything around attendance to webinars and live events, and how that matures into actual investments, if they're not seeing performance week 3, week 6, what it looks like in terms of how we pivot, how we optimize and set up for stronger performance. Even on the Regulation D campaigns, the higher net worth audience raises the cost per lead and how many leads it takes to actually see an investment come through, and how there may be some lower quality leads at first and how that balances out and averages mid-campaign. So if we're not very articulate in how we explain this and really make sure that they understand each of the moving pieces of the projections, the algorithm of numbers to get to the goals, we may not be able to see the campaign through and may not produce anything.
So I'm curious, how do most companies decide their marketing budget spend? Is it usually like as a percentage of their desired investment, or do they use some other calculation to kind of determine what they're going to be able to spend on marketing?
Yeah. So there's some numbers used in the Reg CF space. Historically, it's been around 10%. 10x is the goal, marketing efficiency ratio. Many campaigns, it's on pixel data and different types of reporting and showing up directly attributed to specific traffic sources. So if a group's looking to raise $5 million, it could be $500K to get there. Few of these companies have $500,000 ready and prepared to spend on this type of marketing campaign. So we, of course, would speak to a starting budget as well. For Reg CF, it could be $5K, $15K a month in advertising spend. Then as they're seeing performance ramping that up, $30K, $60K a month in advertising spend, about $2,000 a day. We'll see issuers get up to $100, $150K a month in advertising spend, but likely producing hundreds of thousands, if not millions of dollars in return that month for capital raised. For Regulation D, it could change up. For Regulation A Plus, that there's actually numbers used closer to 3x return I would tell you, I've seen much stronger levels of results, but for a company that's going to be raising, let's say $60 million, if they're working with a consultant, a quarterback who says, hey, plan on spending 20 million, you're going to walk away with 40 million outside of that. It's not a bad approach because sure, they may be able to do it, 3 million, 6 million less, maybe gets picked up. They're earning media. They spend far less. But at the same time, it's tougher to throw these larger numbers into the discussion after a marketing plan, a strategy has been built. So Regulation A plus, maybe it's 50K, 100K a month they're starting with. And as they're seeing performance, they're essentially buying more investments as they're ramping up the results, the returns. And it's not always easy to speak to a founder who's looking to raise money to say, hey, you're going to need to spend 45K over 3 months or 300 grand over 3 months or something like that. But if you point to all the examples, all the reasons why, how this is really needed, not just putting up a campaign and hoping investors find you, even after tapping your first degree, second degree network, which should have an initial tranche of investors coming through. And we'll see B2C companies target their customers, their partners. We'll see hundreds of investments come out of that in many cases, but likely still need to stack more on top to be able to hit the full goals.
Yeah. So they think that the mantra about having to spend money to make money doesn't apply to marketing.
It could be repetition with that message for it to
Yeah.
really land. And some of them don't have it as readily available. Now, you can do rolling closes and take disbursements of the capital raised and reinvest portions of it back into marketing. So once it's actually working, they're able to hit these larger levels of spend. They see the return and are very on board with it. But it could take a while to get to that point.
Yeah, and that's, I would think, one of the big differences between this type of marketing and your traditional marketing, where you have a budget to set out with at the beginning and you're not having to do this kind of stair step approach in some cases.
Mm-hmm.
So you recently worked with a company called, and I'm going to butcher this name, Avidane Graphene.
Yes.
So you can pronounce it correctly for me if I butchered it, but I know you worked with them and helped them with some of their investor marketing. Tell us a little bit about that process. Were they in good shape, from a marketing perspective when they came to you, or were there things that you needed to kind of build within their own group before you could start even running ads?
Sure. So we've currently run 3 rounds with them. And the first round produced 1.375 million. The next round, 4.5 million. And actually, they got an increase approved by their board twice during that. It was first set for 3.7 and they sold out at 4.5. And then the third round, they raised the full 5 million and in 43 days. They won an award around that and have received all types of recognition. That first campaign, there was a lot of question marks and slowdowns through each of the first 2. The third went pretty fast. They had a relatively small email list to begin. So that first degree network, there was only so much capital that could be raised, and it slowed down around 36K. Advertising launched, started seeing performance. I could tell you about the slowdowns at 180K and 350, and it was not necessarily as easy as it sounds. That being said, we were able to test out many different audiences and advertising creatives, the messaging, the visuals, and then gravitate towards what was really moving the needle and what really got audience's attention. Beyond just our assumptions and the client's assumptions going in, we were able to use the performance metrics, the reports that were coming out to determine what to create more of. And we would test out different types of creatives with organic content. So across social media posts, on multiple channels, across the email newsletter and drip systems we were building with different webinars and how we were following up with audiences afterwards, the articles we were putting out, the offering page updates. There's an update section on there, the press releases. The CEO, Brad Larshan, is, I would say, nothing short of a genius and really took the time to learn all of these different marketing channels, where admittingly had, no digital marketing experience before that, and would ask the right questions. And we'd show him and his team what was working on the tests, and then he would scale aggressively as he saw it work. The next campaign, and just to paint a picture, that one took 8 months. I told you the 5 million took 43 days. It was 4 months to hit the first million, 2 months to hit the second million. So the next million, half the time, 1 month for the following million, and then 3 weeks for the final 1.5 million. So we were able to take the learnings and really apply them. And before the second million was hit, about 1.8 million, there was talks to stop the campaign. Whatever investors we get in, we're going to, close out with. Maybe we'll hit 2 million. I think we're about 1.8 million at the time. But I had to point to the metrics, upper funnel, mid funnel, how many investors were close, and the ad reports for the weeks leading into that. We actually had an ad account shut down with some of the creative we were putting out. There was a James Bond creative, and we had to change it up. And basically, there were question marks about what could be raised from there. But looking at what was occurring mid funnel, we agreed to continue running and really saw it pick up, scaled aggressively. I was talking about some of those ad spend levels. It was at the upper end of that in those final periods, but massive return. Over 13x on the pixel data campaign wide, even on the slower periods averaged in there. And it was through that process of testing, optimizing, scaling, very intentionally when it was all occurring, that we were able to hit the levels. Also, outreach to different publishers, getting picked up by different investor email newsletters, winning different pitch competitions and showcasing that across the paid and organic content channels all played a very large role. And then there was this large audience that wasn't able to get through in that closing, and we were able to market to them during the next round and see the value actualized there.
So you mentioned in the second round, it actually closed higher than what you had aimed for. And you kind of talked about this briefly, but at that point when you've reached your goal of investment, what's the step that allows you to kind of keep going with an ad campaign once you've reached that goal? Do you have a conversation with the founder? Do you have a conversation with their board? How do those conversations typically go to allow you to keep going?
Yeah. So for Reg CF, there's this level of about $1.25 million, 1.235 million, that you need to do additional filings with the SEC for your Reg CF to go beyond that and to submit a full financial audit done by an external party. There are easier steps to raise the first 1.235 million. A lot of groups will shoot for that 1.235 and look to see how it goes, and then put in the extra funds, the extra work, the extra efforts to be able to raise the full 5 and have a stronger marketing budget ready at that point. And they're buying more investments with their marketing at that stage. They know what's coming in. So in some cases, it's not as in-depth as others. For this one, they had to go back to their board, explain what was occurring, all the people that were covering them, all the benefits that were happening, how their valuation was growing. And it was a pretty straightforward discussion. In other cases, it could involve a lot of different parties and moving pieces and audits, and there's a lot more involved. The advertising, depending on what the daily spend, the monthly allocations are at that point, we can increase 2x on a weekly level, or at least until we're seeing the same return on ad spend. Sometimes it could be a few weeks for the system to recalibrate. If it's a higher ad spend, perhaps it's only 20% at a time that we're increasing. We have to make sure the audiences are large enough and that we're not overbidding on those audiences and paying much higher CPM, cost per thousand impression rates. We may have to add more audiences. We absolutely have to add more ad creatives. There's not investor fatigue, especially if the retargeting has a high frequency among some of the audiences. So there's actually a lot involved with the scaling, but mainly we don't want to be paying twice as much for the same amount of investors. We have to make sure it's producing twice the amount of investors if we're scaling at 2x. And it's easier said than done, of course.
You've mentioned over the course of our conversation so far several different types of content. You mentioned obviously paid, social, and some PR outreach, and all different types. How do you decide where to start? And I'm assuming it's different depending on the nature, possibly depending on the nature of the business that you're working with. Is that accurate to say?
Yeah. So we get all types of crazy timelines thrown at us, launch tomorrow, next week, the next couple of weeks, say we have less than a month live. We've been able to produce in those scenarios. So we'll take it on if we believe we can drive results. Ideally, you're beginning pre-launch and with a marketing strategy, a marketing plan. There's a model I've built called the 8-point plan. We're generally working on that over the course of a month. I've led many workshops on this, in some cases over 4 hours, 4 days in other situations. Over the course of a month, which is what I'd recommend, and you could go through the strategy process at home, of course, at your offices, is 2 sections a week. and starting with the industry overview and competitor marketing audit. So really getting an understanding of what's happening in the space today and pulling out stats that you could use to paint the picture of the opportunity in the offering page and the marketing. You then get into the competitor marketing audit. And we're always finding new insights just on the industry overview. The competitor marketing audit takes it to another level where you're able to see, hey, what are other issuers, what are other brands running as advertising on Facebook, on LinkedIn? What are they posting organically on their social channels? What are they sending out as an email newsletter? What are they doing that's appearing in other newsletters? Who's talking about them in the news? Who's talking about them on these social platforms? Are they speaking at any conferences? Are they guest on any podcasts? How much traffic are they getting to their site? From which audiences? From which traffic sources? Success leaves clues. We want to be able to pull from that when building a campaign. And we then build off each section in sequence. So we're able to map out the target audiences we want to go after next. And I want to know what these individuals do on the weekends. I want to know where they go online. I want to know who inspires their decisions, their actions. So as I get to the channel section, per your question, I can prioritize what I want to do with paid advertising and with organic content marketing, which channels I want to begin with, which channels I want to add, which channels I want to try out once it's working. We look at the creative and the partnerships the following week, and then the projections and the activation the last week. So by the time we get to that point, we know, hey, in comparison to these other competitors, we're going to be targeting these audiences across these channels with this messaging and accelerate things with these partners to produce these results, an algorithm of results, impressions, clicks, conversions. We could pinpoint where performance is falling off and optimize at those stages. For a campaign that's not obtaining its goals, we could ramp things up for overproducing channels and likely hit them quicker. So it's less about, hey, which one channel are we going to use or not use, more about, hey, what strategy are we going after? And there's always new opportunities that emerge during the campaign. Hey, this financial publisher, this industry specific publisher wants to cover you. What can we do around that? How can we drive traffic around that and produce more conversions regardless of what they drive to the offering page? But if we're able to do that pre-launch, we're able to eliminate a lot of the time spent during the campaign figuring that out, as well as the budget in most cases, to be able to test things, see them not work, go back to the drawing board for that channel, maybe to a different channel afterwards. But it's going to be multiple touch points before an investor even begins the investment process, let alone fully converts. We want to be intentional about what audiences find when they're searching around and doing their due diligence. And we can have a full plan of attack for each of those channels before they ever see the end audience's eyes.
Is there ever any overlap between the audiences that you are reaching out to and the kind of more pure customer audiences? So I guess what I'm asking is, you have investors that could also possibly be customers of the business that you're working with, and how often does that happen?
Absolutely. There's a term used in the space of investimers. One
I
of the
love it.
creators of Title III, the Jobs Act, pushed for it with Congress, got it signed at the White House, Sherwood Woody Niece. I actually wrote a book on this recently, Investimers. And I think B2C is the only thing that comes to mind for most people when that occurs. But I could tell you for B2B, it absolutely happens as well. And beyond that, investors who read about a vertical, we've talked about graphene, we've talked about solar, actually both B2B companies. I could tell you about Rad Intel, the top Regulation A plus issuer that's live right now, over 60 million raised. We've been working with for years. They're selling to agencies. They're selling to brands directly. They'll see, customers come in and invest, but also just people who follow the space closely. But back to that concept of investors and how the marketing funnels overlap. Absolutely. You want to invite your first degree network, which includes friends, family, I like to say anyone you've ever talked to, emailed, messaged, but your client and customer list is part of that. So, let's email them. Let's send, some social messages. If you are a fan of a consumer packaged good product, here's, another client right here. Why wouldn't you want to come on board and invest and become a shareholder alongside the founders? And then they become your strongest marketing channel as well. If I
Yeah.
invest in something, especially it's a company, a product I'm a fan of, probably going to tell my brother about it. I may talk about it with some of my friends I golf with, I go to the beach with, or sail with, and so on and so forth. In fact, I found about 20 to 50% of the conversions come from advertising. Outside of that is organic. It's peer-to-peer. It's referral traffic. It's earned media. So you want to use the advertising to stimulate these investments. But if you're able to get investors from your email list, from your social audience, if they're then able to share, a lot more is possible.
Yeah. I guess I was an investor. I do 3D printing, and this is obviously on a much smaller scale, but people are always crowdfunding for, different software and things like that they're building around the 3D space. And I invested in a project that was, in Maker World, which is a very popular 3D printing platform. And I got early access to it. And then I started printing stuff and posting it on social media, and more people, so I obviously on a much smaller scale than what you're talking about, but, we kind of experience this often in our own lives when we're
Absolutely.
passionate about something. So I think that's great. So one last question, I guess. What would you say is the biggest challenge in this space? What keeps you up at night, or what worries you about the future of marketing in this space?
Well, the first thing that comes to mind is external factors, market trends. What are investors doing in the public space? What are the headlines that an investor is reading about that week? So other types of news cycles and headlines that could create real doubt around the economy. In some cases, future as a whole, that can slow down investors from taking action. And being able to speak to that, if you were able to have a headline-worthy announcement coming out on a weekly basis, it may get far more engagement if it reflects other type of news, articles, announcements that are happening that week. We've had investors in the agriculture and robotics space that will try to mirror what's being talked about in the mainstream news that week. And in some cases around tariffs, in other cases around healthy eating in foods, in other cases around different weather cycles and slowdowns, and being able to be part of that relevancy versus a separate thing. And I don't know if I want to put time or prioritize that right now as a prospective investor. My mind really needs to be over here. You want to feel like you're part of that same conversation, part of that same discussion. If there's an IPO approaching in the space industry, without naming any names, but something we read about all the time, I'm probably going to see a lot of inquiries and campaigns beginning for companies in that vertical. And what they do with their content marketing, what they put in their advertising, can feel extremely timely if done correctly. So it can work against you. It can work in your favor. Beyond that, there are inherent obstacles with marketing. Not every marketing campaign works. The same is true with capital raising. And as a whole, if you look at the stats, the percentages of how many groups get funded by venture capitalists or angel investors offline, I found 4%. It's a very low percentage. So not all of these campaigns are going to work. I want to see a higher and higher success rate industry-wide. That's definitely something that, keeps me up at night. Even a campaign that does pretty well, 2 million, 3 million raised, it completes. I'm up at night thinking, why couldn't they be 5? What did I need to say? What did I need to do to scale it quicker mid-campaign? What could we have changed around the messaging? So there are a lot of variables, the consistency, the educational process. I'm still explaining to people what investment crowdfunding or a Reg D 506C fund is every day.
Well, that's a good place to end then. Thank you very much for joining me, Jason. And good luck in all of your future projects with all these clients. It sounds like you have a lot on your plate, a lot going on, and this is just one area of your business. So you've got a lot to work on. So thank you so much for joining.
My pleasure, Andi. Really enjoyed the questions. I could tell your expertise just by the nature of where the discussion went, and you're asking about all the right topics here. So thank you again for having me on. Enjoyed speaking with you and your audience.